How U.S. stimulus packages are affecting the Bitcoin and crypto market. Whenever consumers receive an influx of cash, they are sure to buy more. Such was the case when the COVID-19 stimulus packages finally arrived. But what exactly happened, and how did it affect the dynamic between consumer and marketplace? Stick around as we reveal the secrets of the stimulus influx on cryptocurrency trading. Before we dive into the video, please make sure to like, subscribe, and turn on post notifications. Our content is always informative and engaging, and you wouldn't want to miss a single video. So, in the final quarter of 2020, cryptocurrencies such as Bitcoin were performing better than they ever had. Their price points had blown expert predictions out of the park and were soaring higher than anyone could have imagined. There was a crypto revolution of sorts, as trading cryptocurrency became more and more popular on social media. In addition, many central figures such as tech CEOs began to prop cryptocurrency up like never before. A few names include Jack Dorsey, CEO of social media platform Twitter, as well as Elon Musk, CEO of Tesla and SpaceX. But with this boom in cryptocurrency trading came negative effects too. All of a sudden, regulatory authorities like governments and large banks began to turn an eye towards the crypto markets. Although some were genuinely interested in the development of this emerging fintech field, some also wanted to control and exploit it. Naturally, traders weren't going to stand for this. And so, it became a waiting game of sorts. Traders and their tech CEO allies stood their ground while banks and regulators began the long, arduous process of crafting new policies. But then, something happened, seemingly coming out of nowhere. The COVID-19 pandemic hit. The effect of COVID-19 on the global economy cannot be overstated. As governments hurriedly instituted lockdown and quarantine orders, so many businesses had to close down. While some lockdown periods lasted but a matter of weeks, others went on for many months. Even today, some places are still under lockdown. Because of all these lockdown orders, so many working-class people lost their jobs. Sure, some white-collar workers were able to start working from home, but then that was a largely uncommon privilege. How do you work from home as a bus conductor? How do you work from home as an airline hostess? How do you work from home as a restaurant waiter? And so, what happened was that all these working-class individuals lost their sources of income. The sad aspect is that their jobs were so menial that they were hardly able to earn any meaningful savings throughout their careers. For these people, it was true devastation. Not only were they individually suffering, but the global economy was also suffering right along with them. And then came the stimulus packages. These are defined as tax rebates and incentives used by the governments of various countries to stimulate the economy and save their country from a financial crisis. The governments who had instituted lockdowns knew that something special would be needed to restart the economy, so to speak. And so, they considered tax breaks for the rich and cash injections for the poor. In the United States, which is one of the countries most notorious for taking advantage of stimulus packages, 3 different instances of cash injections have been given out to the public, representing about 2.3 million different checks and $4 billion in cash. The payments amounted to about $1,400 each time. Now, with all this cash in the hands of working-class people, they were looking to maximize their income somehow. Most people are financially educated enough to try investment rather than simple savings. And with cryptocurrency dominating the news, a lot of people started to look into buying crypto. This is where the trouble began. The crypto markets have always been volatile. In fact, this very same volatility can also be seen in the stock market and the bonds and options market. However, crypto's volatility rose to new heights due to all the interest in it from governments, media companies, social media websites, tech CEOs, and regular people. This increased volatility meant that the least change in the market caused devastating effects. Does that sound so strange? Well then, look at it this way. When regular folks start to trade in crypto, they may not be the most knowledgeable about the scene. Even if they may have done their homework, there are still a lot of intricacies they might not know about. And then there's the issue of experience. As knowledgeable as you might be, there are certain things only experience can tell you. So this lack of knowledge and experience meant that regular traders responsible for market cap acceleration were incredibly skittish about their money and determined not to make any losses. As such, the arrival of any news at all, factual or otherwise, was capable of turning the tide of the market. This is why we witnessed such phenomena as a single tweet from Elon Musk causing Bitcoin and crypto prices to drop dramatically. People had neither the faith nor the patience, so they went where the wind took them. In addition to this, we also had the increased activity of regulators and authority bodies. More and more people were trading than ever before, and it was important for these bodies to come in to protect people from themselves. Though most of these bodies were busy putting out other fires during the heights of the pandemic, the influx of stimulus checks meant that the economy had been given the breath of life. As such, they could return to serious business, and they picked up right where they left off. Most restrictions on trading crypto were tightened, and predictably, this resulted in many people dumping their stock. Though most crypto enthusiasts have maintained their field in the new technology, the masses haven't been as keen. And this is understandable because veterans of crypto trading have seen all this panic before. New traders lack this critical information though. As such, they have destabilized the market. So, tying it all together, the influx of stimulus checks caused a boom in cryptocurrency trading. But then, this boom caused increased market volatility as well as heightened regulator presence. Now, the prices of crypto coins are downtrending. For how long things will remain this way, who could say? Coming to the end of this video, we hope you have learned how exactly the pandemic stimulus packages affected the crypto market. Currently, things are the most unstable and uncertain as they have ever been. Experts are scratching their heads, trying to figure out what happens next. Do you have any predictions on how the crypto market will react in the long term to the influx of cash caused by the stimulus packages? Please let us know your thoughts. Did you enjoy this video? If so, please like, subscribe, comment, and share. Our videos are always exciting and engaging, and you wouldn't want to miss out on the next one. Till then, take care of yourself. Catch you later.